Alrighty, folks. Good morning. And today is the 19th, and we're Thursday. Good morning, good afternoon, good evening. All over the world, you got Patreon, you got YouTube, you got Discord. Post your comments and questions in any platform you'd like. I'm going to answer them before the end of the stream. Before we begin, though, let's give a check here since we got issues with the connections yesterday. Let's see if we have any issues today, but give us a look, folks. Do you see the visuals here? Looking at the SPY 1 minute chart, we're trading right now at 685.69. And if you can hear me fine, see the picture fine. No delays, no lags. Let's begin right away. Okay, thank you everybody for the feedback. Highly volatile session so far this morning. We're going to look at some targets from the options market perspective because we have options expiration coming out tomorrow. So that's also having an impact on today's session. But we have other indicators and moves that suggest that the geopolitical tensions and what the market is pricing in heading into that weekend is really important. So we have here the USO. Crude oil is still moving higher, now reaching the same highs from last summer when we actually got an Iran episode. So it looks to me that we have a lot of bullish bets here showing up in crude oil. And usually crude oil traders have insider information, so they're probably betting with something that they already know is going to happen. And you see that happening, of course, hand in hand with the dollar also firming up at least a little bit in the morning. Of course, facing a little bit of resistance to the 50 days moving average, but nonetheless, it is making higher lows and what it appears to be higher highs pretty soon. So the dollar firming up, you have oil firming up. And on top of that, if you look at gold, it's not really trading badly at all. It's actually moving higher, suggesting once again that there's something brewing here in the shadows, and a lot of traders know about it ahead of time, and they're beginning to bet on that outcome. Now, with that being said, can the action happen today or tomorrow? The bet is it's probably going to happen over the weekend. So in the meantime, we also have another dynamic to worry about, which is options expiration for tomorrow. So let's begin here by looking at the SPY. Why do we see such moves? And notice that in the 1 minute chart, I'm trying to show you here, why do we see such sharp rebounds around this 684 number, right? Why do we see that? We know the resistance here at the gap. But we close the gap and we have resistance at that gap. But why do we see that support right here? Well, let's look at the mechanics, and that's going to explain it all. You look at the SPY 0 DTE's expiration date, the 19th. When we look at the calls, sure, we have healthy volume showing up here, OI change overnight, but we can say the same thing about the puts. So this is an equal battle. No one side has a clear advantage over the other. And then when we look at the volume today, the highest volume I see is 685 for the calls. It continues all the way to 89, but at lower volume than the 85. So that's a source of weakness that we see in the calls. They have higher volume at 85. We see resistance here, but they don't have anything. They're not building anything above quite yet in large numbers. Maybe that's going to happen throughout the session. We'll give it a little bit of time. But for now, topping off at 685 is causing the resistance here, besides the fact that it is a gap. Now, if we look at the puts, we see that the volume pretty much equal here. It distributes from 84 all the way to 80. Now, notice that 84, that's the tipping point. From 85 to 84, that's the tipping point when we see the puts taking over the volume of the calls. So if we go to 84, you have 63,000 contracts. In the puts, you have about 54. If you begin to dip below, the puts take over. So that's the tipping point of the tape, 684, and this is why we see support showing up repeatedly around that number, 684. Now, as far as maximum pain, it's been already exercised on the side of the calls this morning, so you see that most of them are losing money. Now, if you want to exercise maximum pain on the puts, you'd probably want to move the tape above these large numbers of open interest, and that's going to be all the way to 88 or 89. But that depends, again, on the calls building that volume. They have to increase that volume higher be able to push the tape. Otherwise, 85 is still going to be resistance. And then you have 84 as support. And until we get a break one way or the other, it's going to be hard really to say. But there is a possibility here. If we fail, crack below 84, then what happens? You have the negative feedback that you're going to get from the puts, and that's going to lead you all the way to 680. And this is why we say, is it a possibility today? Maybe. Is it a possibility tomorrow? If we look at the expiration date of tomorrow, you see, again, they're buying a lot of volume here in the puts, and we still have high open interest. So if we get sucked into that feedback, then 680 is going to be a visit either today or tomorrow maximum. So that is your zero DTE dynamics here, folks, in the SPY. Now you know that 85 has been 85-ish here, been resistance around the gap, and then you have 84 as support, and we need a break one way or the other before we see a decisive move in the market that is worth following. The Qs, same thing, closing the gap here. Let's see if this is going to end up in closing the gap, and then we come back down. I'm seeing signs of weakness here because the VIX, if we look at the VXX here in the 5 minutes chart, we can argue that this, I mean, usually when you have gap ups in the VIX, VXX specifically, they filled right away. They filled at the downside, and we see the market moving higher. But before you assume that, you have to make sure that this scenario, if a bull flag, is not the one playing out. Because it could be playing out in a bull flag, and we have higher volatility to come. That means that the SPY will go down. So we have to monitor here. If we break the lows in VXX, then we're probably going to head down to close the gap. We have more gains to come here in the SPY where we go up to the targets of the volume as they continue to add volume at 86, 87, and above all the way to 89. Bitcoin is also a source of what's moving the market. So you see tick by tick here. Notice that when we got buying in the morning here, right after the open, we've seen the SPY also moving higher. We put the 5 minutes chart. Then a little bit of a struggle here. Why? Because Bitcoin went down. So Bitcoin has a huge algorithmic impact to what's going on in the S&P 500. My assumption today in the morning, somebody bought Bitcoin because I see a big elevation in volume. My 2 cents will be, again, Michael Saylor buying Bitcoin at these prices right here. But is there a follow-up? Or do we see the sellers taking advantage and dumping right away? If that is the case, that's going to affect the algorithms for the S&P 500 and the Qs. Now let's look at some of the larger names and see how they're doing, because that's also going to have an impact on the SPY. We're trying to pick it piece by piece here. What's moving the SPY from the VIX, BTC, ZRDTs. Then we'll look at the big caps here. So NVIDIA. Anything really changing in NVIDIA? Not really. Gapping down, closing the gap. Now retesting these highs right here. Could it come back down? I don't see a major move happening in NVIDIA until we get earnings out of the way. That's coming out next week. So I think it's probably going to be resolved to the downside. But in the meantime, I don't think we'll see a large move in NVIDIA as options premiums begin to get more expensive. So we might see NVIDIA here just consolidating back and forth and doing nothing at all. Apple, on the other hand, zoom out a little bit in the daily chart. The risk here is that this could be a rejection, as I'm pointing out here, could be a rejection at the 50, as you can see, and then ends up in an inverse ABC. So today's session is really important for Apple to close positive, because if it doesn't, then this inverse ABC is still a possibility. Microsoft, a little bit of, it was a contributor in the morning for moving higher like this. So we see some short covering. We see some options market activities of buying right here, but it kind of stalled and frizzled out. So let's zoom out to the daily chart and see what's going on. Now we got the rebound target as we talked about before, similar to Apple, by the way. You really need a green session today to avert this inverse ABC cut scenario. Because if we go negative again, then that's going to be the highest possibility that we have an inverse ABC and another flush down. So we need to see another scenario of maybe a double bottom, right? But you need to have at least a positive closing today to confirm that. So again, important to watch Microsoft too. As far as Google, if we look at the daily chart, consolidating here at the lower Bollinger Bands. Now, usually this is, you got to give it a few days here, try to give it a chance to do a bull flag and begin to rebound and correct a little bit. But if it continues to consolidate like this, then the behavior of the chart is saying that we're trying to expand the Bollinger Bands to the downside to open more room for declines. So it's a matter of timing here in Google. As it runs out of time, let's say here day 1, day 2, day 3, if you can't make it and move higher, then the possibility would be, nope, we have more downside to come in GOOGL. The name AVGO, still between the 50 and the 200. I think we can do here. You could argue that we have maybe an inverse head and shoulder, higher she goes. You could also argue that we have possibility of an inverse ABC, and down we go. So there's nothing conclusive here. But AVGO trading positive today. That's helping the tape a little bit to avoid heading to the downside. So if we look at the map all in all, folks, what do we see here? We see that technology, as we said in the heat map analysis repeatedly in the last 2 videos, not reliable. You can't really rely on any of these dips to be bought sustainably in technology, be it in software, be it in cybersecurity, be it in oversold rebounds like we see in Oracle today. It has a lot to do with the options market, by the way, because tomorrow's options expiration. And a lot of puts accumulated, so the market maker is pushing it higher, trying to scare these put holders so they can capitulate, and tomorrow probably going to push it down. Not sure if it's going to push it down to the strikes that you want, but it will probably try to push it down and initiate more downside to come. But this is one way to neutralize heavy options exposures, to do a move Thursday to scare the majority of the open interest. But anyhow, you can see that the rebounds in technology did not last too long. You can see that the rebounds in financials did not last too long. We have a little bit of a scare going on right here in asset management. And if you look at names like Blue Owl, for example, if you go back to the market right here, if you look at Blue Owl, that name is down big today. And the reason, 8%, that's big. So the reason behind that is we're beginning to see signs and signals of financial stress. The fact that they're pressing debt to their insurers, that's a bad sign. I mean, the company keeps putting a lipstick on a pig and say, oh, we did this and did that. But at the end of the day, it's a signal that we have stress showing up in these asset managers and lenders and shadow banking. So financials is a no-go. Dip in healthcare, you're getting it today. So I think we're getting really close to healthcare being bought again. Today, it's really about the industrials. So we see DR up 11%. That's moving some of the indices, LMT, the defense contractors, that goes on and on with the geopolitical theme. Miners a little bit on the tame side today. Energy moving up. We know why that's happening, but look at some of the dips that got bought today. Verizon up 2%, right? AT&T up about 1%. Walmart is now rebounding, giving a little bit of confidence here in the staples. So I'm going to reiterate here, folks, and say that at the end of the day, the risk-on rotation has no legs. And the risk-off rotation, defensive/value rotation, is the one that has legs. And investors will have no choice but to go back to it. Okay, so that gives you a little bit of an idea of the dynamics today. Now let's do the movers of the day, see if we have something interesting here. Avis, car, that's going down about 20%. Wow. Must have been a horrific report here. Let's see. Yeah, that's a massive mess here, at least in the earnings. But again, it's not a widely traded name, really. We talked about Blue Owl, JetBlue down a little bit, but it's above the target that we talked about before. So again, it's going to be volatile, but at the end of the day, I think that JetBlue will be bought and hit higher. Carvana got a report, went down big yesterday. Now it's coming back to down about 6.5. So what to do here? I think we have more downside to come, but this is why I don't like to buy options before earnings, because you're going to overpay for them anyways. You might have bought puts yesterday. You're now losing money, even though the stock is down 6.5%, because you overpaid. So I'd rather do the reverse calendar strategies like I showed you yesterday. That money is now going to be in my pocket, right? So you do the reverse calendar strategy, you do the credits call strategy, and then you do the puts after the report is out. And if we're going to do puts right now, it's going to be at the 300 level, because you have this support. If broken, can see here the chart's trying to hold on. Once broken, you're going to have to revisit that 300, which we see here, a little bit of support showing at 300, a little bit of support showing up right here. Not to mention, of course, 300 will be a mechanical support because it is a round number, and there are a lot of open interests going to be around that number in the options market. Blackstone, Apollo, that goes along with the owl theme here. We see, so notice the themes, right? We see weakness in the asset managers. We see weakness in airlines. So Alaska Airlines coming back down. These old guidelines that are not relevant right now. Although the bull flag is, because if you go to the weekly chart right here, yeah, it played out in the bull flag. But now it failed. It's supposed to break to the upside, so it's failing here. Not a good sign for Alaska. American Airlines, Delta Airlines, I think that's on the basis of Booking.com, right? Bookings.com was not pretty good yesterday, down about 8% today. You can see this chart here in the weekly chart setting down, losing that last support right here. So topping head and shoulder is clear in this chart. So you have to do somewhat of a Fibonacci retracement right here. And we think that we can see bookings going down a little bit more. So that's impacting Delta Airlines negatively, all of the airlines really negatively. To a certain extent, even the travel names like hotels and casinos are getting hit too. Wingstop, we talked about the rebound as not reliable here after earnings. I thought it was a weak report, so we're going to stick to being short Wingstop. Wendy's, still not above the 50. We need to close above the 50 before we have any confidence that this guy should be bought. You see the pain in Expedia. Even Southwest is now struggling a little bit, although Southwest is the strongest among the bunch right now. I don't understand why, to be honest with you, just because they don't have, I mean, they have assigned seating now. That's why we're pushing the valuation higher. Okay. Anyhow, we see weakness here in Palo Alto. That was a report from yesterday, continuation of the weakness. Memory chips a little bit on the weaker side. The equipment and chips on the weaker side. So the theme here is the airliners, travel, not doing so hot. So, and the lenders not doing so hot. So some weakness in chips and some of the AI data center equipment showing up here in the decliners. Movers to the upside, we see Deere. That's an earnings report. And again, we talked about Deere before. Now, do I think this is sustainable? Of course not. But it was still cheap at that point. We talked about Deere as possibility for buy. But right now, I think it's just a chase. It's a squeeze. And I would not chase it. I would not short it either. Just pretty to watch right here. Until, of course, it begins to show signs of weakness and reversal and closing below the gap, then we can short it again. But right now, Deere is, if you're long, I would use this opportunity for booking profits. You got covered calls. You have take half, leave half, because we could see more candles here to the upside, but you're probably nearing a top in Deere. So it's a good opportunity to book profits. Etsy, about 10%, but it doesn't change anything in this chart, to be honest with you. It's still sort of a topping in a shoulder, breaking the neckline. So that's a negative. We're not going to buy Etsy here. Oxy got to the target that we talked about months ago. So we're finally here. Oxy showing some energy and catching up with Exxon. So that could be a catch-up trade in energy. KTOS, viewer yesterday asked about it. So long as we have Iran fears, it's working out. eBay, that's a specific piece of news. SNDK is kind of bucking the memory chip weakness today at Micron and WDC, but still within this line of resistance right here. DoorDash, again, mediocre rebound after earnings. I think you fade that. And you have more declines to come in Dash. EQT, I think we're breaking to the upside here. We're breaking to new highs. So we're going to stick with EQT, especially if there's Iran action going. MLCO, I think that we have optimism from the Chinese New Year. So I'm going to stick with this guy a little bit longer, even though the casinos are weaker today. Lockheed, just no stop inside here, folks. Can never bet against war. Mosaic, another Iran play, by the way, because Iran is a big fertilizer producer, exporter. And any action against Iran will stop the supply of fertilizers, and that might be good for Mosaic to move higher. Not to mention natural gas going up. That's going to do the job alone. So Just giving you a few ideas here. If you're betting on that geopolitical theme, you have more than the refiners and the oil stocks, the pure oil stocks or defense stocks. You have natural gas plays too. Nutrien could be one of them. The tankers. Look at STNG. Since we talked about STNG, it's been on fire, really breaking to the upside, and I think we could have more upside to come because all in all, this could be a massive inverse head and shoulder breakout here, and could lead us to the highs. So tankers, fertilizers, even wheat to a certain extent, believe it or not. Iran is also a producer of wheat, so that could disrupt a lot of supplies, and we see wheat head higher. So got a lot of plays here, folks, on the geopolitical theme. But that's what's working out today. Some of the chip names bucking the trend, some of the industrials, and then the defense theme that is moving up. Anyhow, now that we identified the themes of the day, let's go back to the SPY right here. Oh boy, we're seeing a little bit of weakness showing up here. Let's zoom into the 1 minute. What is the culprit here? Could it be BTC? Yeah, a little bit of weakness. VIX, again, cannot eliminate the fact that this could be a bull flag and would break out at the end of the day. Until proven otherwise, we're going to assume that could be the case. So SPY still volatile today. Now, before moving on to your comments and your questions, let's do the unusual activities here. Popular demand, that's what you guys wanted. So we're giving you all of that right here. Let's look at shorter expiration dates, out of the money, volume above OI, and here we see IWM. Selling of puts doesn't tell you anything though. Selling of puts could be a strategy management, especially on the index. SNDK, we see 810 calls. That's a interesting one since we're trading at 600 right here. Oxy, probably a reaction from earnings. Somebody buying the dip in American Airlines. So the name is down, but let's take a look here. Look at AAL. Daily chart. It doesn't look good to me because we have a high, lower high, testing the lows right here. Could be breaking and retesting another low and form a pattern of lower highs, lower lows, and it doesn't look good to me. So I'm going to take a pass on this unusual trade that we see for AAL. XLE, that's interesting. We see puts sell the 57 calls. So let's look here. XLE, 57 calls. So somebody's trying to call a top here in the XLE that maybe we'll see. I mean, there's always a contrarian bet that we're not going to see the geopolitical event. So they're selling the 57 and they're buying the 55. It could be also somebody who holds a position here in the XLE and they're doing a covered call strategy by selling the 57 and they're buying the 55 just as a hedge in case we have a pullback in energy. Freeport buying the 60 puts. That's really interesting. So they're betting on the dollar probably heading higher. And we see a break here of this support that we've been seeing recently in FCX in a bear flag pattern. Maybe a visit to the 50 days moving average. So I would look at that as a hedging opportunity if you own shares of FCX. Besides that, folks, I don't see anything really interesting here. ARCC, that's a little bit interesting. Very bearish. Buying the 19. This is a weird trade, folks. I mean, the volume is way bigger than the open interest, so I'm not sure if this actually went through. But ARCC, that tells me that there's a specific problem with this company in particular, that somebody's betting against it this in a big way in the money. That means they probably trying to short this name. They want to short it, especially there's no open interest. They're probably entering these puts to short the name. And if that is the case, I mean, let's take a look here. Got a breakage of the trend. You have lower highs. So the assumption is that we have more declines to come that could lead us all the way down to the 200 days moving out, or weeks here. We're looking at the weekly chart. Could be all the way down to the 200 weeks moving average. This is a warning sign, too, of systemic risk, by the way, that we see ARCC and OWL, all of them trading like shit right now. That's a warning sign in my book. Anyhow, SPY is still consolidating here, folks, doing nothing. We're looking at the 1 minute right now because I see a lot of volatility back and forth. In the 5 minutes, it looks similar. It looks as a chart that gapped down, closed the gap, and now it's struggling to find direction. But I think that we do get a break before the end of the session. Anyhow, let's take your comments and questions here, folks. And we begin here with, is Oracle a cut? It depends on what you have, right? The trade that I have for tomorrow probably not going to work out now. But again, my entry cost is only 25 cents, so it's worth keeping the trade just in case there's a big flush, there's something that happens. When you have your entry cost lowered too much, you have the incentive to hold the trade. But if you have your entry cost being large, you overpaid for something, then you have to recalculate that quickly. So I don't know what your expiration date is. I don't know what your strike is. So I can't help you here because if you look at Oracle, right now, leans toward the scenario that we talked about here. It could be a bull flag, and we're going to retest the 50. That's a possibility. Is it definitive? No, because we're not breaking above, let's say, the highs of this flag. Highs of this flag would be this number right here. That would be 165.39. Break above, you know that we're going to retest the 50. On the other hand, this could be just neutralization of the massive put options that we see for tomorrow's expiration. And after that, they push the tape down and close the gap either way. But maybe that's going to happen next week, not this week. So I would say right now, if you have, let's say, March puts or 2 weeks from now worth of puts, you still have no reason to cut it because there is no conclusion yet. It's still consolidation and trying to find the direction. And of course, this kind of consolidation eats away value from your options. But if you have tomorrow's expiration puts, let's say, at 150 or below, the chances are getting really, really slim, especially for the 145. Okay, report of Carvana telling it's a scam. Interesting price action. Could we check the report and decide is it time to short or not? I think you don't need to even look at the report to know that because the chart is telling you all the story that you need to know. The chart is saying that this name, went ahead of itself and we have this top already. The top is already in. Now we're beginning to look for where do we find support. And maybe we find a little bit of support right here, but we're still below the 200 days moving average. So long as you're still below the 200 days moving average, that means you have to look at the weekly and you got to break the 50. Once you break the 50, now you're in a bearish phase officially. So again, no invitation cards at this point. The earnings report is out of the way. If you want to short Carvana, I think you should begin doing that right now. Mav, add to dash shorts. Whisper of the night. Yes, I think that you fade the DoorDash bounce. So I don't understand why Jeff says that the DoorDash shorts are effed because we're not. Still holding the topping end of the shoulder, still below the neckline. It could be like Wingstop. It fades at the end of the day. And the report was not good, by the way. The report was toppy. So I would say we're probably going to look at this as an opportunity to add to that short. Now, of course, after a report and you see a move higher, gap higher, which was much bigger, by the way, in the pre-market session and post-market session yesterday. Usually when wait the 3 days rule, right? 3 days, let it settle. And then this is day number 1, 2, 3. And then if we're still below the neckline, we're not above 200, for example, you still have your death cross right here. You short it again. Really volatile session here, folks. And the SPY just consolidating, but in a volatile move. Tick up, tick down. I have SIL 85 puts for March 20. All was fine until gold started firming up because of war fears. When we could say silver puts no more, or you have no reason to hold the SIL puts. Yeah, the problem here is that if there is action against Iran, it will benefit gold. I'm not sure about silver, though. So you're still below in the macro futures here, and silver is still below the 50. In the regular futures, you're still below the 50. And if you look at the miners are overreacting a little bit, but I don't think there's a justification of that. So I would not cut my puts on SIL until we break above the top of this candle. That's going to be 106.48. So if we move above, okay, I will say, got to follow the chart, and the chart says that we have a retest, probably this gap right here, if not the highs. Otherwise, I'll keep it. Now, again, when we have any geopolitical event, it benefits gold more than it does silver. But even in this episode of the Iran conflict, let's say there is a strike this weekend, I think we go to the dollar, and the dollar spikes higher, and even gold heads down. And the reason is it's no longer really a hedge against anything. It's no longer really a safety of anything after this speculation that happened here, after this rally that happened. Is it really a hedge against geopolitics? Not really. I think that the dollar is. The dollar went down big, and the dollar is cheap right now. So I think that investors will go with the dollar as a hedge versus gold, and they might, of course, use the defense contractors or oil. So there are a lot of other options beside gold. Maybe in the year 2025, when gold was trading pretty much without this excess that we've seen, gold has been a hedge against geopolitics, as we've seen here. When the first Iran episode happened, we've seen gold heading higher. But I don't think this time around it's going to be the case. I think it's going to be the dollar going up. So I'm going to stick to those silver shorts. If I were you, I would still give them a little bit of a chance to for them to work out, because you don't have a cut loss confirmation yet. If one is not short owl, thoughts on entering now, asking for a friend. I get you. It's okay. But I mean, you have a lot of options, by the way. I mean, we talked about Aris, right? It's not just Blue Owl. Blue Owl is the problem right now, because Blue Owl, I mean, it's amazing that the CEO comes out and tries to say that that it's a good thing, because it's not. And here what they did is they halted the redemptions. Big red flag. And on top of that, they're trying to sell here. Look at this. Sells $1.4 billion from debt funds to pension insurance investors. Another signs of stress, even though CEO is putting a lipstick on a pig, saying that, oh, we have the company receiving 99.7% of par value in the loans. That means it's a good thing. Not really. It's showing that you have stress here in Owl Capital. So it's not the only one that you could be shorting here. Well, this is not relevant anymore. So it's, yep, there was a risk here that we could rebound. Didn't happen. Now we have a retest to the lows. You break these lows, you're probably going to head down and retest the other lows in 22. And honestly, I think the company will go to zero. If you want my opinion, the reason why I'm shorting it, it goes to zero. It's going to go bust. There's a financial crisis 2.0 happening. And I think that Blue Owl, even companies, by the way, like Apollo, could be a victim of that. Because when Owl is liquidated and they have to sell their software stocks, that's going to hurt Apollo, that's going to hurt Aris, that's going to hurt a lot of even Blackstone. So if you want to short any of these names, I think you have a solid fundamental thesis. These names are heading down. Of course, Blackstone, a lot stronger than Owl. Not going to say that it's going to go to zero, but Blue Owl is. So you have to understand, if you short Owl right now, though, you're going to pay a steep interest rate. You're going to have a higher margin requirement. So I want you to shop around in these names and see if you have a better deal in KKR, better deal in ARES. All of these names are going to trade together, by the way. Blue Owl will suffer the most, but it's going to drag the entirety of this sector down. So I think you have pretty good shorts here if Blue Owl is too expensive to short at this point. Okay, we're back to 84 now in the SPY, which is hold or die. If you don't hold, you go down to 680. Do you think the Iran catalyst could throw away the C-leg conversion in silver? Could be, but again, I'm just using my head here. Is really silver and gold, are they really hedges right now when you have alternative in the dollar being cheaper, in the VIX, in oil, in defense contractors? I don't think investors are going to gravitate back toward gold and silver in a geopolitical episode. That's just my 2 cents. So I don't see any technical indicator either. If you look at SLV, for example, I don't see any technical indicator either that says, oh, we're flipping the bullish now and we might see a break to the upside. If anything, this lower high pattern with the lows usually breaks to the downside, and we're still below the 50. So if I have any shorts in silver, I would still keep them. Defense shows up again. Look at that, 84, and you get a bounce right away. They're trying to defend that really, really hard because the market maker knows you break 84, you're going to have a flush to the downside. Small, Klarna proves the buy now, pay never is dead. Any major risk building up. So we've seen that unusual activity, right? Which looked pretty good. It looked like somebody knows what's happening here. But unfortunately for them and anybody who followed, like myself, not working out pretty good today. So that trade is a bust. And again, Klarna was a disastrous report. I looked at it in the morning. And of course, it tells a lot of warning signs in companies like Affirm and all of that buy now, pay later sector. Even, by the way, in the credit cards. Because if we have stress in Klarna and Affirm, then what do you think is going to happen to the credit card companies? I think that the MasterCard is a short right now. I think the Visa is also looking a lot weak and beginning to break to the downside. I think the Capital One would be, let's see, Capital One, COF, excuse me. Capital One, same thing. So I think that we have a lot of signs here of weakness in the consumer, and Klarna was just another confirmation that even the buy now, pay later, we see a lot of weakness, even in the volume. I mean, that was surprising to me that the volume is actually down. Okay, Mav, yesterday you mentioned Israel as a beneficiary of the potential upcoming geopolitical situation. Which instrument would you recommend looking at? Thanks for everything you do. So again, you have to stick with the defense contractors. The Israeli defense contractor here is ESLT. That's the major defense contractor that they have. And the assumption is that money will flow to that company. Now, there's another theory behind ESLT that goes, you actually should be shorting it if the war starts, because it's going to be a target right now. The Iranians going to bomb these companies, the defense companies in Israel. And that could be a problem. But the money's still flowing to a company like this. Defense spending is increasing. So ESLT, I see a break to the upside here in ABC. You can go with the Israel ETF, but that has a lot of financials and banks. I think that might go down actually when we have the dollar going up. That's going to be a problem for, because if you look at the correlation between the Israeli stock market and the value of the shekel, as the value been going up, which is, by the way, this is the best kind of scenario you can have in any economy, when you have the value of your currency and the value of your stock market heading up together. But I think that once the dollar begins to be this resource of safety because of the war, the shekel goes down and it drags the Israeli ETF down, or the Tel Aviv stock market down. But a defense contractor like ESLT, that's going to hold a lot better. So it's really up to you. If you want to avoid the risk altogether and say, look, I don't want to be involved in any of the Middle Eastern companies here, you just go with Lockheed Martin, because Lockheed Martin is going to get a lot of push from the U.S. government. You go with Raytheon, that's going to be the top beneficiary because we need immediate supply. Raytheon is going to get a lot of funding from the government right away. So the defense theme, doesn't matter which one you pick. Even the Europeans, by the way, EUAD, that's going to be another one that's going to begin to move higher. So any defense is a good hold right now. Okay, thoughts on SNDK share offering from WDC? Well, that's why we see SNDK moving up a little bit today, opposite WDC. But I think it's a one-day phenomenon, to be honest with you, and it doesn't really change a lot. I think these companies are trying to hedge against each other because they know the competition is ramping up, and at some point that competition is going to begin to hit the pricing power of these companies. And again, cannibalization, competition, this is how bubbles pop. So they're trying to say that, hey, I have a stake in you, you have a stake in me, we go down together, we go up together. So that way the competition doesn't get too aggressive and push the prices down too much. But again, it's an attempt. That's not going to change anything really in real life. At the end of the day, it's the hyperscalers. Those are the ones that have the power. If the shares continue to suffer, they're going to have to cut CapEx, and that ends the memory chip bubble right away. Where do you see the cues for the day? It's a little bit of a tougher question than the SPY, because the SPY, at least we have data. Qs doesn't really trade that much in the options market, but we closed the gap right here. So let's see how this behavior is going to be. Can we trade above the closure of this gap? Okay, then that's positive. Have a retest right here, and then we could talk about other targets. But if we're stuck, if we're done here, then that tells me that the market here, the Qs, will probably going to go down and retest the lows. So we do have a move coming here, folks. But right now, I think the market maker wants a positive close, and they're trying really hard to keep that support intact. But I see that the VIX still showing strength. And if I had to bet, if I'm a betting man, I'm probably going to bet that we're going to see a revisit to the lows. So it's going to be closer to 602, 602 and a half, not breaking above. But that's just a guess here. It's not based on anything. SPY USO trades would recommend based on your morning brief. Want to be ahead of the action, George. Okay, so USO, the calls, you buy the calls here, you have a breakout 80, so now you have to look at the retest here at the highs right here. So we're looking at 83. Can we do something such as here, USO? And again, it depends on how long do you want to go, right? You can go to the next Wednesday, and you buy 85. And that's going to work out, 85 or 83 if you want to retest the highs exactly. That's going to work out if there's a strike over the weekend. What if it doesn't, though? Then the 25 is going to decay pretty fast. So you're better off here. If it was up to me, I would go the 85 and then sell the 90. That way I'm spending 110 to make 390. A lot of folks would say, but that's limiting math. What if we have a big pop in crude oil? Then you can up the strikes a little bit more and sell the 95. And now you have a wider difference between the strikes, meaning your profit is going to be bigger. Another way you can do it is just buy crude oil contracts. So look at the contracts here. April, that's the nearest contract we can have. And in this case, we're trading at 66 right now. How about we go with the 70 and maybe sell the 80. And now we're spending 1,500 to make 85. Chance of profit 31. That's a pretty decent trade, of course, if you can afford this kind of exposure. I'd rather go with the futures, to be honest with you. But if not, USO is tracking the futures, so it'll work just fine. The only difference is that the options premiums in the futures are priced in more attractive than the ETFs. And that's applicable, by the way, for the E-mini SPY futures versus the SPY, or the E-mini NASDAQ futures versus the Qs. Even though you pay more, but the pricing relative to the price of where we see the futures trading is much more attractive and gives you a better chance of profitability for a smaller break even than if you trade ETFs. But it's not a major difference, so it's really up to you if you want to go with crude oil contracts or USO. But that would be my suggestion. Let's go for a longer expiration date and keep a larger delta gap. For example, 85 in USO, 95, 85, 85, 85, 95, excuse me, for March 20. I think that's a pretty good trade if you're betting on geopolitics. Another trade could be on the VIX if you'd like. So if you want a short-term trade that we could have a strike happening this weekend, maybe you can buy the VIX for next week and don't spend a lot of money. That'd be complementary to the USO call debit spread that you have for March 20. Lots of volatility here, folks, in this session here. 84 continues to be the rescue that the market maker doesn't want to break below. Okay, do you think we should buy FIGs with today's unusual call? How does it look on the chart? Well, just like I said yesterday, it looks pretty decent, right? It looks like somebody knows what's going on. We have a break. At least we have a retest to the 50. So if you want to chase it all the way to the 50, that's fine. If we pass above the 50, then we're going to retest the highs. I think somebody knows what's going on here, and they're betting on this report that's going to produce a positive result. Now, my own observation, yeah, I see a lot of the practices that I go to using FIGs right now. So there could be merit behind it. But Mav, can the Iran theme disappear tomorrow the same way it faded before? Yes, you'll see volatility in that, but at the end of the day, the fact that it faded Tuesday, that it came back with such strength on Wednesday, you have to understand that the insiders are the ones doing these trades. They get information from the White House, they get information from whatever. and they begin to place their bets. You see it in the prediction markets. You see it in the commodities markets and options. Of course, now a lot of the insider trading, by the way, moved toward the prediction markets because there was no regulations. If somebody has insider information and they buy SPY puts or they buy crude oil calls, they might get caught if the trade is so obvious. But if you do it in the prediction market, nobody's going to catch you. There's no regulations over there. So I want you to watch the prediction markets too. If you see that the odds are increasing, then the insiders are betting on that because they have information on the date and the specifics of when the strike is going to happen. Davips, hey Mav, thanks for all you do. Looking to continue to hedge short position SNDK. More calendar call spreads. What would you recommend? So you have two options, right? You have reverse calendar call spreads, which a lot safer. And reverse calendar call spreads will be something such as, let's target 750 or 800. Let's go 800. So it's going to be something like this. SNDK, you sell the 800 for a longer expiration date. And then you buy, what the hell did we do here? 800, so here, for the 20th. And you buy it for a shorter expiration date. This is a safer strategy because it's called reverse calendar call spread. If the name moves above the sells right here, the sell and the buy, your buy is going to cover for the sell, at least for a period of time. So it's going to give you a little bit of a time. You're not squeezed all of a sudden. You have to manage a naked sell here in the call, and now you got margin calls in your account. No, this is going to cover you, give you a little bit of cover. You can exercise and own the shares at 800, and then cover for that sell right here. Or you could book the profits and then use the proceeds as a margin cushion so you can short at the 800 later on if the price goes above by March 20. So this is a reliable strategy. The other one would be go with the same expiration date. And you do a regular call spread, right? Not going to give you a lot of credit, but it has a stop limit. It has a stop loss limit, which you know exactly when you pick your strikes. Now, calendar is better, in my opinion, than the credit spreads, because the credit spreads are not raising a lot, to be honest with you, and the risk versus reward is not really that good. There's another strategy, a little bit more complicated, but this strategy would be somewhat such as a short call butterfly, which is a little bit safer, and you can here sell the 700, for example, buy 720, then sell the 740 and get some credit. You can play with these expiration dates all you want, and you'll get some credit in a safer way with the maximum losses manageable versus, let's say, a credit spread. So you have options right here, but today I think that it was based on the news from WDC. If we don't break above the sloping line, though, then nothing really changes. SPY back at the highs of the day here, folks. What was the trade, the SNDK 800 calls? Who's betting on much outcome? I'm not comfortable with my shorts. If you're not, then you have to do something such as that reverse calendar, or just follow the trade. Buy the 800 calls naked, and that should cover you if there is another spike higher. Be honest with you, I don't see another move in SNDK. I think the majority of the good news is already priced in. But again, there's speculation here. It could be somebody who's just speculating. It could be somebody who knows something. Either way, if you do a reverse calendar call spread, it'll cover you from both sides. It'll give you an option to short again. We'll give you a coverage if we have a rally all the way to 800. Dear Mav, Walmart, please. Walmart. I don't like these results, to be honest with you. I don't like the results, and I think that Walmart's probably going to head down to that correction target. If it does that, then I'll be comfortable in buying the dip. But I'm not going to jump right now because, I mean, you can see it clearly here that we have a topping and a shoulder pattern. Yes, we got initial positive reaction, but it is fading right now. It almost gone negative, right? So it's almost negative here. That tells you right away that investors are saying, okay, report's not as bad as we expected, but I got to book profits right now. So I think that Walmart should go down to this target, this trend line right here, and then we're going to reassess. Okay, Maverick, when should be a good day to take profits for oil defense basket? The high beta. So if you're doing the high beta, Again, they're going to benefit so long as we have that Iran fear. But you have to be more disciplined with the profit taking, because say if there's a news over the weekend that, oh, the talks are still going to go on, we're doing positive progress or whatnot, you're going to see sharper pullbacks in these names that you mentioned, like KTOS, like Carmen and DRS. All of them will be a little bit more aggressive. So, and you have redundancy, by the way. You don't need all of them. I told you yesterday, pick one, and my pick will be KTOS. Just pick one and ride it, and make sure that you trim profits little by little by little, 10% at a piece, 10% of the position, as the name goes higher. Because we're still in the speculation of an Iran strike, so you still have the positive tailwind going on. It's just, I think that you have a lot of redundancy, and you need to have a risk management strategy by reducing that redundancy, and maybe stick with 2 names instead of 4. Hey Mav, can you please check on BMY, Bristol Myers, February 27th calls, 58 USD, you rolled twice, but already now turning red. Healthcare is weaker today. So my assumption is Bristol Myers is also joining the weakness here, but yeah, it's only consolidating the bull flag. My 2 cents, the money's going to rotate back to healthcare. So the dips should be bought. I'm going to stick with Bristol Myers here. And I think that the only problem that you're facing is you have the expiration date. So maybe you want to consider here changing that expiration date, maybe restructuring the trade altogether, going with a 60, 65 or 60, 70 call debit spread for March instead. That's going to give you comfort of mind so you don't have to worry about the decay when it comes to time. Okay, Mav, you sound so sure about SPY hitting 680 by either today or tomorrow. Is technology the main catalyst here? Yes. I mean, it's gonna if it happens, it's going to happen because of technology going down. And again, it's going to happen because the 84 support keeps failing. Right now, it's succeeding, right? 84, 1, 2, 3, and 4. It just keeps going as support. But if you break it, I think 680 is in the bag. It's going to happen because Bitcoin weakening. Because, I mean, Apple is the exception, but Microsoft weakening again, Google weakening, AVGO. It's going to happen because of the big cap technology, especially NVIDIA, weakening a little bit more. I think that would be the reason. Of course, a pop in volatility here, if this indeed works out as a bull flag, that's going to do it. Okay, Mav, updated thoughts on the SMH. We just talked about that yesterday, right? Does today change anything? Nope. We're still within the consolidation, within the rising wedge pattern. And strongest names like Micron kind of stalled here. Look at the map again. You have AVGO up today. Give it a refresh here so we can get the latest data. So you have AMD, oversold rebounds, I assume. AVGO, a little bit of strength, but not enough. And the rest are down, with the exception of SNDK because of the piece of news that we got today. I see more downside to come. I mean, this is going to shake out the confidence out of the chips. I think it's going to be the reason why the Qs and the SPY correct once we see the SMH beginning to break down. Now, can it break down before NVIDIA's earnings? I doubt it. Will it break out because of NVIDIA's earnings? That's what I'm betting on. Looks like another retest coming here, folks, for 684. We'll see if that holds or not. Looks a little bit rapid, so the VIX is moving up. What's going on with Bitcoin? Not a lot. But we're going back in the retest here. Jeff, you say you hope my internet is good. Well, so far it's good. Yesterday was horrible, though. Yesterday just can't upload anything, really. Violence, you say ban those, the spammers. Look, I can ban whoever is member in my Discord, but these guys create different accounts, and they're not members of the Discord. They just go in and they poach the members list. And there's no easy way to mitigate that. If you know a way to mitigate it, let me know. How can I keep my list private? Because you can't really. But if you know, let me know and we'll do it. Otherwise, you have to take my guideline and my word for it that I will never message anybody. Even folks who request, they say, Mav, can I message you? I'm probably not going to message you either. Anyhow, AI building because I want to keep a precedent that that's not going to happen. And if you get any message from me, it's probably a spam. AI building of DC done via loans, but data centers, that is. But everything goes exponentially more expensive. Cost of materials. Don't forget about depreciation. That's the big one. That's the big one that they're hiding right now. Interesting question of how DC builds gets additional money. I've never seen construction. Yeah, it's insanity. We're going to look back at it and say, what the hell were we thinking? This was the most obvious bubble and crash in history. And we didn't see that happening. But again, we're in the heat of the moment right now. We're in this bubble right now, and people are clouded. Their judgment is clouded, and just look at the spending and say, okay, that's going to be the new normal, I guess. These companies are strong, and they make excuses for why that's happening. Yo Mama Capital, that's a pretty good name. Owl getting a smackdown, cap fund halted redemptions. Yep, it's a bad, this is just a bad, press Carvana short too late. No, not too late. No, we're just beginning here on Carvana. This is the time when you want to add those shorts. Russia and Iran conducting naval exercises. Yep, that's happening today, so it's heating up, folks. And the talk is, at least for my information, the talk is it's going to happen this weekend. Firecat, good morning. Greg, thank you so much. And Anton, hey Mav, a risk management question. Just curious about what percentage, how many BPS of your account do you risk per trade? Okay, so I said that previously, right? My entire options account is not even 10% of my overall portfolio. Because a lot of options trading is gambling, and you're going to lose 7 out of the 10 trades you make. If you're really good, you lose 6 out of 10. If you're really, really good, you have 50-50. So a lot of folks who go all in options, if your entire account is just options trading, that's not a bad thing. I've seen a lot of people who got rich just doing options trading, but you have to be really selective. In days when you don't see it, you don't sniff that opportunity, you don't need to be involved. If you can master that kind of discipline, yeah, you'll be a great option trader because you're only going to get involved when you have specific things that you look for, giving you a check mark, and then you're going to enter the trade with certainty. And sometimes you even enter with certainty and still lose. But the other skill is cutting loss quickly. When things begin to work out against you, you cut loss quickly. SPY, look at this, folks. The support, once again, success. They're defending that 684 for dear life because they know you go below 84 and you got a problem. WHR, 85 March 20, rolled twice, but in the red again. WHR is not a name that is widely traded in the options market, so you don't want to do options trades on it. It's not a bad trade. It's only, I think that the lack of volume is hurting your trade, really. But right now, it could be just consolidation here before we head higher. If we break the neckline in this sort of topping in the shoulder, then I would say, okay, we got a problem. So that's going to be if we trade below 85. That's going to be a problem. But right now, I would keep the trade. I think the only thing that's hurting you, because it could be also in the larger scheme here, could be a cup and handle. What's hurting you is the lack of volume, because nobody's really trading this name via options. So when you trade names like this, by the way, you have to be in the money, which you are. That's the good news. I would say be a little bit more patient with it. It might actually work out. Mondelez dipping. Any opinion? Yeah, Mondelez dipping a little bit more here. Let's look at the weekly chart. So we got, now that's a bearish engulfing candle. So I don't like that. And we're kind of violating that shoulder line a little bit. So I'm going to say that you're probably better off sticking with Hershey's. because Hershey's is pure cocoa. There's no other involvement like Mondelez with biscuits and gum and all of that. So I would stick with Hershey's here over Mondelez. Let's take a look at the SPY, folks, one more time here before we wrap it up. 1 minute chart, still consolidating, doing nothing. So what do we see in the options market activities here? Expiration date today. Now we see volume showing up in the calls. It tops at 85 though. You need to add to these numbers here because they got pretty good numbers. They got pretty good momentum here to push it all the way to 690 if they want to. But the puts are also fighting back with great volume, so it's an equal battle right here. And it's in the interest of the market maker to keep it right around the turning point. You see that? 85 right here. If you go above 85, you're going to get sucked into the call feedback. If you go below 85, you're going to get sucked into the put feedback. When I say sucked into the feedback, we're talking about the high volume that you see right here. It takes you all the way to 680. And the calls takes you all the way to 690. So the market makers right now just staying here as neutral as they can. Why? They want these guys to get decay, right? And they're succeeding, by the way. Majority of the calls in the red right now. Majority of the puts in the red right now. And then they're going to follow one of these feedbacks. They're going to follow either the calls or the puts, and tomorrow's options going to have an influence on that. So you need to watch also tomorrow's options. And here we see volume added, although closure of the calls. So the calls a little bit weaker. We see additions to the puts. The volume looks to me that is healthier in the puts. So if I have to speculate here, I would say probably a break to the downside in following the put volume, not the call volume. After the market maker plays the game off, keep it around 85, 84, keep it around that. Make sure that you get a lot of decay, and then conduct the move. That would be my 2 cents for this tape, folks. Light is let's look at the short KRE. It looks weak. KRE in the financials, look, the KRE, it looks weak. Maybe you have an idea here of inverse ABC. So I would not blame you if you go short all the way to the 50. So that means you buy the 70 puts or the 68 maximum. And that could be a decent trade because you have justification for it. Lumentum, does it just go up all the time? Appears so for now. This one is actually breaking to the upside. So SNDK is not, but Lumentum is. Which means that if you sold any calls and you're not exercised yet, that's lucky. We have to up these strikes to longer expiration dates and try to exit or reduce the quantity of any calls that we sold that are in the money right now. Again, at the end of the day, the name is going to go down, but the question is, how high can we go before we begin to head down? So this is going to be a classic.com kind of chart where it trades to whatever highs it is, then it comes back down and it settles at the same lows it began the trade with. But that's going to take a little bit of time, a little bit of pain in the short. So adding via increments is the name of the game if you're shorting these high momentum names. Back to the SPY. Let's see here. Mav, when you're talking about bazooka trade on the SPY, 677, yeah, around that number. But I'm going to look at the futures too. You have to get a confirmation for the futures too. Did you cover Walmart earnings? Yes. So my 2 cents of Walmart is don't buy right now. I think that investors are selling it and they want to see a dip all the way to the trend line before we see buyers showing up again. So I'm not buying the dip right now. I'd rather wait for that trend line. I think the report is okay, but there are signs of weakness. And if you guys want to do that, we can do Walmart earnings analysis tonight. If you guys want it, if you guys want to vote for it, we'll do it tonight because I think that's important. Walmart right now is the reflection of the consumer. So we need to see what the pockets of weakness and strength are in a company like Walmart. Don't forget about APO. Yeah, we talked about APO. Any private debt, it's not just Blue Owl. Any private debt will be sucked into the contagion effect. Would you suggest buying new shares in Exxon? Why RTX lagging? Why LMT is not? Okay, so do I buy XOM right now? I would not suggest that because the chart is toppy. It already has sort of a topping pattern right here. Would I buy USO though? If I want to bet in geopolitics, yes. Now the other question, RTX versus Lockheed. Lockheed is the first name that comes to your mind. When you think about geopolitics and defense, LMT is the default name that comes to mind. So they're buying that. But which company will benefit? From a fundamental standpoint, it'll be Raytheon. Raytheon is the one that will get funding right away because of the missiles. LMT, it just benefits because it's the default name that people think about when we think about geopolitics. The momentum is horrible. I'm trying to sell credits online all week. We'll try to do the reverse calendar strategy, right? Because if we sell naked calls and the price keeps going above, that's going to be a problem because now we're obligated to short at that price. But if you do the reverse calendar, you're still going to raise credit, but you can still have that buffer and that hedging strategy that if the price goes up, your call is going to appreciate too, that you bought for a shorter expiration date. So I would suggest right now for anybody who's shorting Lumentum, that if you want to raise credit, do it via reverse calendar calls. Don't do it via spreads. Definitely not via spreads, call spreads, or naked calls right now. After that disaster report for Carvana, we got an upgrade from almost all banks. No, that's bullshit. That's absolute bullshit. No, Carvana, I mean, I looked at the report yesterday, and it's a disaster. So I would say that Carvana right now, even the technical pattern here is a disaster. So my 2 cents, you're really close to breaking the 50 weeks moving average. That's your bearish confirmation. That's your confirmation to short the name. Don't listen to the banks. Can you do Walmart to Costco report comparison? Yeah, I think that's a good one, right? So we have a series that we call the stock battles. You can find that in the playlist. If you go to Patreon, you're going to find it in the playlists on YouTube too. And we do that series of stock battles. We haven't done one recently, but we can do Walmart, Costco. I usually take your votes on these videos and do them based on what people really want. So Walmart, Costco is a really interesting one. I'm going to write it down. And once Costco's out, we're probably going to do a comparison in stock battles. Anyhow, before we wrap it up right here, folks, because we have a session coming out in Discord. We have a chat session coming out soon in about 45 minutes. But look, I gave you my 2 cents here. Market maker is just trying to do this strategy frustration to eliminate the calls and the puts because they know they have a problem here with high volume and high open interest in both ways. And then they're going to follow one of these feedbacks, either the calls or the puts. My bet is they're going to follow the puts because we see more volume of puts being bought in tomorrow's session, at least right now. That could change by the end of the session, but right now, I see folks buying more puts than calls in tomorrow's expiration date. So that could influence the market makers to say, okay, if I have to follow any feedback in today's expiration date, I'm going to go with the puts. That could lead us all the way down to 680. But anyhow, folks, thank you for joining me for this session right here. And we'll be back in about 45 minutes. Thank you for joining, and good luck with the rest of the day. Take care.